The cost of house purchase, Module 6, Property Taxes and Homeowners Insurance. The next component in a mortgage is property taxes. Property taxes fund your local government and community services such as public schools, police, and road maintenance. Not all lenders are required to include property taxes in your mortgage payments, but no matter where you live, you will have to pay them somehow. However, the cost actually does vary depending on where you live. Your property tax costs depend on the value of the home and the amenities that your community offers. Although each state and county has their own guidelines for determining property taxes, the standard method to calculate property taxes is to multiply the assessed property value by the mill rate and then divide the sum by 1,000. The millage rate, commonly referred to as the mill, is the amount of tax payable per dollar of the property's value. Each local government determines their own mill rate by multiplying their deficit by 1,000. Property taxes are typically paid twice a year in the spring and fall, but due dates vary based on location, so be sure to double-check your own. The next cost is homeowners insurance. While you aren't legally required to have homeowners insurance, most mortgage lenders won't give you a loan without it. The purpose of homeowners insurance is to provide you with financial protection in the case of damage or losses to your property due to certain perils. Each policy varies, but the most common perils covered include severe weather, burglary, and fires. Even if your mortgage lender doesn't require to have insurance for your home, it's still smart to have it so that you're protected in these circumstances. Before choosing an insurance company to go with, you can shop around online and compare quotes. Many insurers will provide you with a free quote online in just a few minutes. The Zebra even has a feature on their website that helps you find the best options and compares them side by side. Home insurance protects you from high costs of damages or loss within the home and property. It can also cover liability for any injuries, damages, or loss to others while on your property. If you encounter a fire, flood, injury, or general damage, home insurance may cover the cost of the repair and, in some cases, the cost of alternative housing while fixing these issues. In certain areas, which are more prone to environmental damage, it may be nearly impossible to get a loan without specific homeowners insurance coverage. For example, coverage for flooding and hurricanes, earthquakes, and fires. In this case, you will need to purchase an additional insurance plan for these more serious concerns. There is homeowners insurance for almost everything you can imagine, from volcanic eruptions to meteorites. In conclusion, property taxes vary on price based on location, but all homes will have them. Homeowners insurance may or may not be required by your mortgage lender, but it is always advised to have insurance. You may need specialty insurance if your home's location is prone to certain natural disasters.